Tax already came out of your pay. That line on the payslip is PAYG. You did not get a choice. This is part 1 of the Australian tax series, what PAYG is, why tax exists, where it goes, and the $18,200 tax-free threshold. General information only, not personal tax advice. Check ato.gov.au or a registered tax agent for your situation. PAYG means pay as you go. If you are an employee, your employer withholds income tax from each pay and sends it to the ATO. It is not an extra tax. It is your income tax, collected during the year, so you are not hit with one bill in July. You can check the amount with the ATO tax withheld calculator. Your employer uses the TFN declaration you filled in, plus the ATO tax tables, to work out the amount. It shows on every payslip as tax withheld. At year end it shows on your income statement in My Governor, that is the running total you settle when you lodge. If you do not give your employer a tax file number, they must withhold 47%. That is the top rate plus the Medicare levy. Get a TFN. It is free. You have 28 days after starting to give them the declaration. After that, 47%. The income year runs the 1st of July to the 30th of June. This return is the 1st of July, 2025 to the 30th of June, 2026. That year has ended. This is the return you lodge now. Why tax exists? The ATO collects it for the Australian government. That money funds services we all use: health, education, defence, roads, welfare, disaster relief, and pensions. Here is where the 2025 to 26 federal dollar actually went, from budget paper, 1 of the 2026 to 27 budget. Total spending, $812 billion. Social Security and welfare, $298 billion. That is 37 cents in every dollar. Pensions, job seeker, families, the NDIS. Health, $127 billion, 16 cents. Education, $65 billion, 8 cents. Defense, $53 billion, about 6 cents. And $108 billion, 13 cents, is general purpose money to the states. Nearly all of that is GST. The budget's own summary: over 1/3 is Social Security and welfare. Around 1/6 is health. GST is 10% on most goods and services. It is already in the price. 1/11 of a GST inclusive price is GST. Most basic food, and some health and education, are GST free. You pay it at the checkout. The ATO collects it. The states and territories get it. You cannot opt out. PAYG is withheld before the pay hits your account. GST is in the total. Employers report your wage through single-touch payroll. Banks report interest. Share registries report dividends. If you invoice without an ABN, the pair can withhold 47%. Cash jobs are still income. Lodging is how you settle the year, not how you volunteer to pay. When you lodge, the ATO compares what was withheld with what the rates say you owe. Too much withheld, refund. Too little, a bill. PAYG is the installment. The notice of assessment is the result. How to lodge on MyGov is part 4. This video is not that walkthrough. You still declare all assessable income. Salary. Interest. Dividends. A side hustle. Crypto. A property sale. Missing income is how refunds get clawed back later. If you are under the threshold and nothing was withheld, you may not need to lodge. If the ATO tells you to lodge, you lodge. Use the Do You Need to Lodge tool. Do not guess. Australian residents pay no income tax on the first $18,200. That is the tax-free threshold. It has been $18,200 for years. It is still $18,200 on this return. That is $350 a week. Only the extra above $18,200 is taxed. Claim it with one employer, on your TFN declaration. That is how PAYG on your main job stays lower. If you have a second job, Do not claim the threshold there unless your total income will stay under 18,200. Claim it twice and the extra job is under withheld. You can cop a bill when you lodge. Job seeker, youth allowance, and AW study usually already use the threshold, so a job on top should not claim it again. Foreign residents do not get the 18,200. Working holiday makers have different rates. Most people also pay a 2% Medicare levy on taxable income. That sits on top of income tax. It is not built into the 16-cent and 30-cent rates. Low-income reductions exist. The full rates are Part 2. Super is not PAYG. From the 1st of July, 2025 your employer must pay a 12% super guarantee into your fund on ordinary time earnings. That money goes to super, not to the ATO as tax withheld. Do not mix the two lines on the payslip. If you are a sole trader, you are not on employee PAYG withholding. The ATO can put you on PAYG installments instead. Same tax, different tap. This series is federal income tax for individuals. Companies pay company tax. States levy other taxes. Different taps. You still do not get to skip them. Tax in Australia is progressive. The extra dollar is taxed more as income rises. You do not pay one flat rate on everything. That is Part 2, brackets versus the rate you actually pay. Deductions can reduce taxable income. That is Part 3. If you lodge yourself, the name date is the 31st of October, 2026. Do not leave it. Part 4 is the MyGov steps. If this helped, subscribe. Playlist is in the description. Next is Part 2, how the brackets actually work.